Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for Monday, October 15th, 2018. Now that trading's wrapped up for the day, I was pretty quiet relatively in the trading room today. I mentioned on the site, going flat, my index, going home flat on the index shorts, at least the NQ position over the weekend. I wanted to see how trading resumed today. After last week, they parked it right up on those key on or right around key moving averages, support levels on the weekly charts and even the daily charts. And I wanted to see what today would bring, whether we'd see, any more upside. For the most part, it turned out to be a consolidation day. You can see now I know the QQQ was down 1.27%, but the small caps were actually green today. The SPY, which is more representative of stock market, was only down, I believe, less than 0.5%. And when I say only, relatively speaking, you look at these big candles, and you can see today's candle right here. Not very big. In fact, this was the smallest intraday range. When you basically just look at the bottom of the candle, that candlestick tail right there up to the top. So you can see this was the smallest trading range since you had back here when we had that little bear flag pattern. So but yet still a down day. Now, here's my thoughts going forward. Again, I wanted to see how we traded today, and although it was mostly consolidation day, I'm going to give a check mark to the bears and open up and start to lean more towards the downside. In fact, today I went home short. And the reason is, and I'll have some stops not too far above. I think it's objective. You can see this 174 level. I had it on this chart. I've had it on all my charts here, 174.90. Here we go. So give or take, call it 174 up to about 175, and you can see it's this line right here. Go back to that chart we were on, and I'll show you what that level defines. You can see reactions back here, reactions here. Right there. There's a candlestick high, quite a few right there. We had this failure there. So I think that's a pretty significant level. And on top of that, you have trend line resistance here. I know I have a lot of lines on this chart, but there's that longer term trend line. So pretty much what you have is we parked it back above 174 on Friday. That's that big green doji candle there. Today we failed back below there. Now here's the thing, guys. There's a lot of volatility. When volatility spikes like this, you can shoot above, below, support resistance, and you can also see we're still above the 200-day moving average. So I guess the easiest way to say this, we're in close enough proximity still to all these levels that anything can happen. It can go either way, but there just weren't buyers stepping in today. We're still below that 174 level. We're still below trendline resistance. Very oversold, but what happens is when you have a consolidation day like this, it helps to work off those oversold conditions. So you can see the RSI, even with Friday's a big bounce, has moved back above the 30 level. So we're technically speaking, at least by that metric, not oversold. And again, most importantly, we had a kickback to resistance and we went a hair above it on Friday and closed, but we're down below there again. And I think we're going to probably head lower now this week. I think we're going to get another thrust down. I wanted to see how, if the buyers could step in and force into Apple, Amazon, Microsoft, the FANG stocks, and they didn't. They sold them today. So that's the daily chart. I don't want to spend a lot of time because we've already covered the weekly chart, still dancing on key support. And again, it would be surprising, but not out of the question to see us come down here and not have at least a bounce off here. Now, we've had a reaction off this level. Last week, we shot below it and we closed above there. So that's technically a reaction off that candlestick or the trend line right there and the 40-week moving average. So far today, we're flirting with it. So again, from this weekly chart, anything is still possible. Let me say that. Support is support until unless broken. We're above that 40-week moving average, which is a 200-day moving average in QQQ. Very important MA, and there that long-term trend line. But the more I look at the intraday charts, and I'm seeing this lackluster bounce here, what I think is going to happen here, I'm looking at the posture of the 60-minute PPO and the RSI. I'm leaning towards this scenario where we had this counter trend bounce. Maybe it continues on tomorrow. Maybe it pop up, but maybe not. But I think we may get another sharp wave down here. And what that would do is take us down here to about just below the 160 level or so, because I have a target there. All it really has to do is undercut Thursday's lows right there in QQQ. And if we did that, where I'm going with this is you can see it would give us nice bullish divergence. I really like to see that on the 60-minute chart to position long for a swing trade that's going to last more than just a day. Friday's counter trend bounce was a one-day wonder so far. That was part of that bounce, not all of that rally, but part of it was faded today. This is where I really get interested in positioning long for a swing trade that will last days and possibly weeks, and that would be this scenario here. And based on what the posture of these the indicators, the quicker it happens, the better. So I would welcome, and I am, positioning for. If it happens, great. If it doesn't happen, I think it's objective to short here with stops not far above, as I showed you those levels on the daily chart, and get a quick swing down. And it would happen fast. I can tell you that. If it happens and we start to undercut these lows, you'll probably see a waterfall sell-off again, and the reversal will come fast. Which brings one more point. I don't want to digress too much here, but I had a question on my Facebook page the other night, and then one in the trading room today, both regarding mutual funds. One person asked if on the Facebook page if they sold their mutual fund today before the open, would they get, yeah, or maybe it was Friday after the close, would they get that price? No. See, mutual funds are not good for active trading. And even if you're not actively trading, but you're trying to exit on, let's say, a pullback to support. Let me just go over here and I'll give you the example. So we look at QQQ daily chart. You can see, and I've talked about it for a while, I think we'll revisit the lows from earlier in the year. My next target, I think we're coming down to whether we bounce more or not before then, is about 160, 157.64, give or take. Let me see if that aligns with another board here. There's the lows. Possible we get all the way down here to 154.45. I'm going to have to zero in on these targets, but I'm leaning right now maybe towards something down there around the 160-ish level. Let's just call it 160 for right now. Let me put a line up there for you. All right, so what I'm getting at here, if we get a quick move down, and I've seen this many times, and I can even give you examples, and you have mutual funds and you want to exit your mutual funds, well, you can't short a fund. Let's say the other way around, on a bounce. Or some mutual funds that will actually, they have inverse mutual funds that will short the market, and you try to get out there. Mutual funds price at the end of the day, they take all the orders, whether you put it in before the market open or even after the market closed the previous day. All those orders get bunched up, and then they execute. They value all the prices, all the price of the securities in there, all the holdings at the 4 p.m. close, and then that's when they come up with the price of the fund. So what I'm getting at, and I've seen this many times before, you come down, if there's a sharp move down, you get there, and that might happen at let's say 11 in the morning or 2 in the afternoon, and then followed by a very sharp reversal. What am I talking about? One of these big reversal candlesticks here. Here's one right here. There's one. You can see that doji right there. And from low to high, that day was February 9th. It snapped back from the lows to the highs. If I did that right, I think the crosshairs are there. Oh yeah, 4.74%, almost 5% reversal, and that was tag of that support line right there, and that's not uncommon. So keep that in mind. And with ETFs or futures, you can have an order there to cover right above 160, and you can hit it quick because if we get that panic type sell-off and we get oversold again, we have divergences put in. The reversals usually come pretty fast. We saw that reversal come fast on Friday. Likewise, if you're looking to sell, let's say they pop it back above here intra-week. Remember, all that really matters on those weekly charts is a closing basis. So there's still very much the opportunity, as I showed you on a weekly chart here, for QQQ to bounce off this weekly chart, give us another bounce, maybe break this trend line later. It could be weeks from now, and they could close. They could print a green candle above this weekly trend line today. And if they did, I'll show you some levels. We'll probably bounce up. The next resistance is pretty solid there, right around 178. So if we bounce up there and we can kiss that level and then reverse, that's another thing. So with an ETF or futures, you can exit right there, or enter, and of course you have the ability to short the ETFs and the futures. You can't really do that with mutual funds. So That's that. And as of now, anything's possible, but I would think this bounce would certainly be contained around 178, give or take, even if there's an intraday pop above it. But at this point in time, I'm leaning towards that downside scenario. So let's say we're targeting about 160. We look at a 60-minute chart. It's a big move down, but again, it could look something like this. If it happens pretty swift, bring this the PPO down, put in a higher low, give us this positive divergence here, higher low right there versus prices making a lower low, and then set the stage for a nice reversal. So I'm starting to lean this way right now. And one more chart I need to show you. I should have lined this one up. Yeah, there it goes. Fits good. All right, I showed in the trading room this morning. This is a 15-minute chart of futures. And where were we today? Don't think we had hit it yet. The bottom today. Here we go. This is the 15th. There's the 12th. Today's the 15th. So here it is. This was last night and today. So okay, well somewhere in here. And what I'm looking at on this 15-minute chart of NQ, and I like the futures because it shows round-the-clock trading. You see more reactions on the important levels. I'm looking at this level here, which is 7170 right there, 7169.90. We'll call that 7170, and this line right here. Lots of reactions along the way. We had a little brief, spike below right there, but we snapped back up, and another little spike below today. But this forms in an ascending triangle pattern. Those are inherently bullish, but they can break either way. And when they break to the downside, they're pretty bearish. Earlier this morning, I thought we might be able to get a pop above there, but I didn't play it. I mentioned standing aside. I wanted to see what happened, how the market participants acted today. Did they step in and they buy? Is there still a big demand for dip buyers to buy Apple and Amazon? Obviously, the answer today was no. And so now I have a little more confidence that we may go lower. And so I positioned for a break of this. And looks like we've got it since the close. We're cracking below it again. Again, we've had a couple whipsaws below it. There's one right there. But again, we snap right back up. This one so far we broke below it and we're still down below it. Again, these are futures. So that's a downside break. The way these patterns measure out, if you take an ascending or descending triangle pattern, you take the widest part of the pattern right there and you add it to where it breaks out. And I can actually do that with a trend line here and it'll be a little easier. So take a trend line, draw it from the top to the bottom at the widest part of the pattern. Now you take that trend line and you put it. So an upside break, if it happens, and it still very well could, tomorrow, that would take us up here to about 74.28 or so, give or take. And that's just approximation, and it does line up nice with some horizontal price resistance there, and a downside break on the flip side, which so far we've had, and this one's looking pretty legit, would take us down here to cutting off on the bottom about 68, 65 or so down there. And that would be a pretty swift drop. You could see it would undercut the lows. And again, it would also give us that divergent low here on the NQ. So I like this scenario. I can't tell you with the utmost degree of confidence it plays out, but that's where I'm leaning right now. I would certainly respect, and I am with my shorts, a break above here. I have two lines. If we get much above there, I'll stop out. But I think the risk reward for a short in here, especially if you can get it close to the top of this 60, the top of the range around 61.70 or so, I think it's a pretty objective short entry with a stop not too far above the top there, about 71.20, 72.21 here. And I'll give it to you for you QQQ traders. Let's take a look at that. So QQQ, similar story. I'll zoom in. That was a 15-minute chart. So let me go to a 15-minute chart of QQQ, show you how it looks here, get rid of that line, and there it is. So it's not as well defined, remember, because QQQ, these are showing me 9:30 a.m. to 4 p.m. Trades. But you can see roughly the same. I'll color the lines for you here. I'll make them, this color stands out right here. So that and that. And again, we've already broken down the way I have it drawn. See, this trend line doesn't fit as well as that other one. And I could probably move this trend line down. Yeah, that's what I should do. That's the top of it, about 174.28. You can trade QQQ in after hours and pre-market a little bit, and there's still work to be done. So I'm also looking at it this way. This is a cluster of recent sideways trading. So here's another way to look at today's price action. Uh, a definitive or impulsive break to the top of that range, bullish. And like I said, there's a lot of overhead resistance. I'm not at this point in time. I don't think we're going to see a runaway rally. We could pop up certainly, 2-3% plus to the upside, but I don't think it's much more than that. And then, of course, to the downside, we could have another waterfall sell-off, especially if we're getting a lot of redemptions from mutual funds and ETFs. And this is what I talked about for many months now, forced selling on those FANG stocks. Too much money piled into index funds, ETFs, QQQ, SPY. And, as oversold as we are now and as much as we dropped, we can drop a lot more. Okay, and for you SPY traders, and even if you don't trade SPY, we should, take a look and make sure we don't see anything that contradicts our analysis on QQQ, or at least what I do on some doesn't contradict my analysis on QQQ. There it is. There's your similar ascending triangle pattern. You have pretty good resistance there, about 277.15. You had a trend line which was broken before the close today, and let's see. So if we were to break that, we can take a measurement, but that, I wouldn't put too much weighting into the measurement, but that could take us down there. Either way, whether it takes us that far or even farther, which is my guess, a little more than the measured target, it has the potential to do the same thing that I was talking about on the NQ 60-minute and QQQ, and that would be something like this, something along these lines. Quick flush down. Wish I had the arrow tool for that. There we go. Quick flush down, a reversal somewhere down there, putting in a nice divergent low on the 60-minute chart, and then allow us to cover our shorts and to swing trade, put on a swing trade long to game a bounce, and then at some point back short again. That's my plan. 60-minute chart. There it is on a 60-minute chart. You could see same story. I was showing you those divergences, how they look on the 15-minute there, but this is a 60-minute chart, and you'd have the same story. So where does it go? SPY targets. We need the daily chart. We can't even see any support on there. And this looks, again, I may have mentioned yesterday, if I didn't, or on Friday, we have this bearish pennant type pattern here. In QQQ, we set up that bear flag pattern that broke down. This is a larger bearish pennant, and that has larger or more powerful implications. That's a bigger pattern. This is your flagpole right here, the impulsive move down leading up to that pennant, and you take the flagpole. You add it to the top of the pennant, and that would give your measured target. And look where that comes in, right here around these those lows that I've been calling for to be revisited. The lows back in early February and April. So there it is. And keep in mind, I have a pretty significant support zone, 270.38 down to about 267.99. So we'll call that 268. Let's round that up. No reason to miss it by a penny. All right, this is important. A couple reasons. We're flagging right here on the 200-day EMA or pennant. Bearish pennant. If we fail, we come back down. We're going to undercut Thursday's lows. People are going to freak out. Stops are going to be hit. Anybody that stepped in long then will be feeling the pain. Shorts may pile in. And then just below that, we have a very significant support zone right here. So put it this way. I think if the top of the zone goes to 70.38-ish, which is also Thursday's lows, that will probably start to usher in the selling. If 268 goes with conviction, there's just not a whole lot of support. That's just that simple. And usually when you enter a thin zone, or you break a significant support zone, you're going down lower, especially with this type of market where there's a lot of this impulsive selling. Again, anything's possible. I mean, if that happens, we break down, go into back test, fake everybody out, a little fake down move and a reversal. That's why you have to be nimble in these markets. You just have to be nimble, keep your position size small, to account for the oversized gains and volatility, and that helps you not get stopped out. If you traded today, and that's why I wanted to watch things. If you traded today, QQQ or NQ, it was a chop fest. This is a 1-minute chart. This is today's trading from here on over, so you can see this. Looks like an EKG, and it was certainly tradable. I showed you that which I put up in the trading room this morning. the we started earlier. Here it is, that 60-minute chart right here of, or 15-minute chart of Nasdaq futures. So I put this up and defined this line and this uptrend line as a significant level, and you can see, there were trades to be made, and there have been since last week. Go short the top of that range. This morning I was looking for a possible breakout above it, but it didn't happen. And then we had these two breakdowns, and so far this one stuck. But again, you could have gone long here, short here. That's the trading range. But what happens is, just like a wedge pattern or anything else, we're compressing. We're getting close to the apex. You can't do this forever. So sooner or later, this thing breaks. And right now, that's my expectation to the downside. Here's your first support right here. And if we have a waterfall sell-off again, it could take us much lower. Let me wrap it up there. I think I covered just about all the levels that I needed to. Only other thing I didn't hit on was a SPY daily, and let me just make sure I didn't miss anything, guys, before I wrap this video up. Anything that might be important. These are the times we make our money as traders, when there's volatility. No, I did cover the SPY daily. That's right. I talked about the bearish pennant and all that good stuff, and the weekly. Really nothing more to update that I didn't since Friday. There it was. We parked it back on that 40-week moving average on Friday at the close. Like I said, that's where the bottom of the body of that candlestick is. Right now we're below it, but again, it's a weekly chart. But there's nothing good right now in this weekly chart. We're not above it. We closed on it, and now we moved back below it on SPY, and you also had resistance overhead. So basically, we're below too many good support levels, which are now resistance. So if anything changes, we'd have to rally up in the next day or two. My near-term outlook is bearish. Let's just keep it that way. All right, we'll wrap it up here. This has been Randy Finney with the right side of the chart. I hope you enjoyed it.